traders, welcome. It's Shane from Global Market Trader. I thought I'd take you through our Countertrend Buy setup, and what I'm going to do now is just walk you through a couple of indicators that we're looking for. So in this instance here, you can see that we've got price just making a little bit of a low or a bottom here, and that's at 107.90, and we've got our volume spike indicator that tells us that there's an extreme in volume selling, but you can see price doesn't reflect that. So our cyan dots are showing us that the selling is getting extreme in volume. So selling volume is extreme, but you can see that price is not really, it made a slightly lower low, but there's no extreme movement. And we also see a yellow dot here. Now the yellow dot tells us that there's price divergence. So when you see that on your chart, you're looking for that to appear on your chart. Once you've got that, it's really we've coded that up so it shows you price divergence instead of having to manually find that on your indicators. It's automatically showing on your chart. So you've got what we've got here is we've got a volume spike, we've got price divergence, and we have volume divergence as well. So remembering that when we're looking for a potential setup on our counter trend trade, because remember that the more entry filters that we have for our counter trend trade, the stronger the potential probability of it being successful. So ideally what we want is we want to see both divergence and a volume spike in our setup, because the volume divergence is telling us that while price is making lower lows, the sellers are starting to run out of momentum, and we're getting divergence on the selling volume. So that's exactly what we want to see. So that's been coded into our indicators as well. So you've got, once we get our cyan dots appear at the bottom of our chart here, that tells us that we're getting volume divergence as well. So let's have a look at this trade. We come down here off this high up here at 108.10. We get down to 107.90, and we're starting to see a little bit of a base form. And then our entry point is just there at 108.01. So you might even move that up to 108.02 if you're wanting to get a little bit of clearance above that key level. But that's basically our entry point. The cyan cross is our entry point. Of our filters, we've got a bit of a base form here. We have volume divergence, we've got a volume spike, and we've got our MACD, we've got our price divergence as well. So with all that in play, we've basically got a higher probability setup. So let's go through that again. A volume spike, volume divergence, we've got our base or our double bottom, and it's just showing a bit of a double bottom there, and we've got our price divergence, which is our yellow dot. Now the trade gets in at 108.01. Now with our stop, our initial stop is always going to be set below the swing low. So on entry, we're basically going to work our stop below this swing low here. So let's just move our chart down a little and grab that. So our stop is going to be around about 107.86. And you can see there, that gives us just that little bit of protection. If it breaks that area, then we're out. So we're in the trade, and as soon as we start, now you've got a few options, but what I like to do is when our trade moves 10 points in our direction, so in this instance, if it got up to 108.11, I would start to trail this stop. So around about here, I would start to use my trailing stop. Now our trailing stop, or we call it our TP, our trailing profit, because we're looking to take profit when we trail. We sit that just here. It's the red crosses once we're in the trade, and you can see it's just, the price is just staying above that. Now I personally like to use a plus or a -2. So I personally like to use a -2 on a trail, which is a stop offset. So 2 points below, you can see our moving average, our trend line is starting to kind of support our move. It's gone to green, which is confirming the buyers are in, and we're holding nicely above that. Now we get up to around about, let's have a look, 108.30, and you'll see here that we just drop off here. You see we get resistance 108.40, and price just falls back below. So that basically has us out of the trade, and we're now looking for our next setup. Now interestingly, on this particular trade, we actually slipped straight into a sell, because you can see that on our offset we get taken out of the trade, and we potentially get knocked into a we might get knocked in. We've got our criteria for a little bit of a top setup. We have a volume spike and we have volume divergence there, but we don't have our price divergence. Now you can take the trade based on, say, 3 of the 4 indicators, but it's up to you as to how you go into the trade. But the more of those filters you have on, the higher probability the setups are going to be. So for that trade there that we were in, the long setup, we pulled out plus 27, but you can probably see already that we're potentially looking to jump into a short here, and that starts to move in our direction as well. But more on that later. So thank you for your time, everybody. Just recap, that's a Countertrend Buy Setup. We used a number of indicators to get in, and our trailing, our take profit line, which is our cross here, got us out, and we were trailing by 2 points below that, and that got us out at 108.28. Price pushing up here, getting some resistance at 108.40. So you can see it just pushes back down. So if we bring up our, so that really gets us out of the trade, and you can see that entry there at 108.01, and we just nicely push up to get a target there of 108.28, and we're out for 27 points. Now you can work a fixed target on these trades. You don't have to use your TP take profit. You can just have incremental fixed targets, but remember that whatever our initial risk is, because that's always going to be dynamic because we're using a couple of points off the previous swing low, then we want to make sure that we're at least going for a target of 1.5, 2 to 1. So we want to keep our reward at least 1.5 to 2 times our risk, because we want to maintain a positive expectancy. So every time we trade, we've got to make sure that that we're at least giving ourselves every possibility to take more than we have on the table as far as risk. So thank you for your time, everybody. Look forward to the next update, and we'll catch you then. Cheers.